Hey guys, welcome back to Investing with Wesley. Here on today's live episode, we're going to talk about just all the drama that's going on with into it. Let me explain to you about what's been happening and answer some of the questions that people have sent me before the stream. You good?
Yeah. You should wait till you let some people. Do you have anyone on there yet?
No. That's live.
Okay.
Oh, I do have a viewer. So a couple days ago, the Reddit feed called Wall Street Bets, they created a feed and basically a plan to create a short squeeze on the GameStop or the GameStop stock. It's kind of a tongue twister. And basically why they did all this is they were just tired of big hedge funds and big billionaires like always winning at the stock market and controlling it and that kind of stuff. So they created a plan to, in a sense, manipulate the market themselves in their favor. Well, they chose GameStop because they found out that a bunch of different hedge funds were shorting that position. Now, if you don't know, shorting a stock means that you're betting against it. So these hedge funds would be profiting. The hedge funds would be profiting in the event that the price of GameStop's stock would go down. Whereas normal investors that aren't shorting the market are betting that the price is going to go up. So when these Reddit users found out that there's a lot of billionaires and hedge funds betting that the price is going to go down, because, I mean, let's face it, if you look at the actual financials and fundamentals of GameStop, like, they're about to go bankrupt and out of business, in my opinion. But these Reddit individuals wanted to make these billionaires lose a bunch of money and force them basically to lose in the market that they feel like they've been controlling. So they initiated a squeeze. And basically what that partook in the squeeze, buy a bunch of call options in GameStop. And a call option is basically a contract that you say you're going to buy 100 shares of this particular stock at a particular price, and you're betting that the price is going to go up. So you're doing the exact opposite of a short. And when you buy a bunch of calls, it's a whole different kind of market, and I'm not really going to get into it in this live stream, but when you buy calls, it forces your broker or the market makers to buy underlying shares at that particular price. So if you have enough people or enough money pouring money into call options, it forces the market makers to buy those actual shares and not the call options, thus driving the price through the roof, as we've seen recently. And that creates a squeeze because, in a sense, against the market makers' will, because everyone knew what was happening, they're kind of like strangling the market makers, like, no, you're going to buy these because I'm buying call options, and it forces you to do it. So it's a form of market manipulation, but it's really hard to call it market manipulation because even the hedge fund people were manipulating the market at themselves. So it's kind of just, at this point, it's just a lot of drama that it's ultimately who's going to last the longest. So let me read some notes here. Okay, so with all this taking place and with the price of GameStop skyrocketing through the roof when they don't really warrant that kind of growth, Robinhood and a bunch of other brokerage platforms halted the capabilities of buying those shares. So they halted GameStop, AMC, American Airlines, a couple different other stocks that they felt were at risk to this giant short plan. Robinhood as just an example, they're the ones getting the most heat over it. Robinhood making it not okay for investors to buy GameStop and come in on some of the hype. Well, they still made it able to sell. So if you were already in the train and you rode it to the top and you wanted to sell and collect your profits, they still allowed you to do that.
Well, there were some people who struggled to sell because whether there was issues with the app or whatever the case was, there was some times where people couldn't sell even though they were trying to.
Correct. So as my beautiful wife behind the camera just pointed out, some people that wanted to sell couldn't sell or were having trouble selling. And this is basically because of a bunch of circuit breakers that go off in the New York Stock Exchange, as well as different trading platforms like Robinhood. And usually when this happens, it's because a lot of people are trying to sell all at once, and there's not enough buyers in the volatility market to even that out. Because when you sell a stock, you only can sell it if someone's willing to buy it at the price you're willing to sell it at. That's the whole point between the public offering price, the pop and the bid and that kind of stuff. Well, because no one was buying because they weren't allowed to buy and people were having trouble selling, it forced a correction in the stock and drove it down, which is why people are throwing a bunch of shade at Robinhood and other platforms for saying they're manipulating the market because they're preventing people from selling in a roundabout way and that kind of stuff. Well, Robinhood came out and said that's not why they did it. They're trying to protect their users from falling victim of planned market manipulation. And the issue with that is surface level, I have to take them at their word. But if you dig a little deeper, Robinhood gets paid by the market maker known as Citadel Capital. That's who owns. They own Melvin Capital, which is a hedge fund that was shorting the GameStop stock. So you could argue that the owners of Robinhood were losing a bunch of money in a different holding company of theirs, and therefore went over to Robinhood and said, no, you got to put a stop to this so that we can recoup some of our losses. So, you have to take Robinhood as a company at face value, and what they say is what they say, but also there's always a chance of some corrupt behind the scenes business going on that we don't really know about and we probably will never know about. And that's, as far as a brief overview, that's pretty much all that's been happening with GameStop and other stocks that people have been shorting or choking in a sense. And there's two questions that I have that I got asked prior to the stream. One of them is, why is Robinhood manipulating the free market? And you could argue they're not manipulating the free market. They're just, as kind of what they said, they're just trying to protect other people that are jumping in on the hype without really knowing what's truly going on. So you could argue on their behalf that they're not manipulating the market and that they're just trying to protect their investors because they have honestly a fiduciary responsibility to do that and to stop market manipulation on the Redditor side. But you could also argue that they are manipulating the free market because they're forcing the price of GameStop and other places back down so that their, brother company, this hedge fund, actually makes their money back. So the argument can be made either way. Do I think that they are guilty of market manipulation? Absolutely, but I think all three parties here are guilty. I think the agreement that is based on zero fundamental. It's just a troll to take money from the rich or from these hedge funds and make them lose. Do I think that Robinhood was manipulating the market? Absolutely, because they're just too closely linked to these hedge funds that were losing money. So I think there was market manipulation the whole way through. And the problem with market manipulation is that it is really hard for the SEC to prove and regulate, especially when it comes to like dollar stocks, like really low, really cheap stocks. They mostly regulate the big blue chip companies or the moderately large companies, and not so much the penny stocks. So as a bunch of Redditors flood into what would be considered a penny stock because its value was like at $2.30 a share or something like that, it really creates an issue because no one's really monitoring that kind of thing. And there has been very high up political members like senators and so on saying that there needs to be change and there needs to be more regulation. There needs to be, in a sense, police patrolling that area of the market. So I can see.
Do you agree with that?
I agree that the SEC has a history of being very passively managed and is more reactive. So to have a more proactive approach, I think would be a pleasant change, but it depends on how they go about doing that preemptive change. Like they could go way too strong and then it, invades people's freedom of investing in the market, or they could go, not strong enough and, it's all for show. So I agree that something needs to be done and that more policies need to take place, especially as technology advances and we go more. Rule that was created for online issuance of stocks was like in the 90s when the .com first started. So we're definitely due for an update on how the rules work. But I do think it'd be a good idea for the SEC to get involved. And do I see people going to prison or getting fined? Probably not. There's just too many people involved, especially because Reddit is supposed to be a forum that is like incognito, like no one can really track you on Reddit. So it'd be really hard to hold the Redditors accountable. And if you're not going to hold them accountable, you can't really hold Robinhood accountable or any other platform accountable because like, where's the equality there? But
so you don't think anything will come of the class action lawsuit against Robinhood?
I think as far as the class action lawsuit against Robinhood, there's been already a couple different class action lawsuits. As when the markets were plummeting back in 2020 and people were trying to sell all their positions, Robinhood basically shut down. It couldn't handle that much activity all at once. So people couldn't sell and collect their profits and they were forced to take a loss. There's already a class action lawsuit for that as well. I think in the world of investing, there's no such thing as a regular lawsuit. I think it just always goes class action. And I don't think anything really bad is going to happen to Robinhood. They'll probably have to pay like a fine, they'll settle it out. But at the end of the day, it's going to come down to who can wait the longest, because as most of you are aware, you can buy a stock at $1 and check online that it's worth $10. But until you sell, you don't actually make that profit. It's all just, ghost money in a sense. So the Redditors aren't going to sell. They're going to hold, even though they can't buy more. They're going to hold. And the hedge fund managers, they're going to hold as well, because it's cave first. Who's going to sell first? And if the hedge fund managers give up their position, accept their losses, and invest their money somewhere else, it opens the availability for these Reddit users to sell their positions, collecting their profits, and basically saying like, yeah, we won, screw you, Wall Street. But you also run into the same problem. When that happens, people aren't going to be able to sell all their shares all at once because no one's buying those shares anymore. And no one's buying those options anymore. So my prediction for this, how this ends, is the same pretty much anytime this happens. And this doesn't happen often. What you see with GameStop doesn't happen often. It's actually kind of history in the making for how big this has blew up. But minor forms of market manipulation happen all the time. A good example of when Tesla hit the S&P 500, a bunch of ETFs that track the S&P 500 had to buy in the equal weight of shares of Tesla that they represent in the S&P 500. So if Tesla takes up 5% of the total, gross volume of the S&P 500, each ETF tracking the S&P 500 had to put Tesla at about 5%. They had to keep it equal weighted. Well, that forces a bunch of funds like these ETFs and mutual funds that track them to buy crazy amounts of shares of Tesla, thus forcing their price up. You could argue that's a form of market manipulation. You could argue, it's not really fair, but at the end of the day, they're doing exactly what they set out to do. They're matching their portfolio with the S&P 500. So It's just little forms of this kind of thing happen all the time. This is the first one that gained a lot of media and a lot of traction because it was premeditated on a junk stock to completely bankrupt the Wall Street in a sense. So to wrap up, in a sense, everyone involved is right now. And if I could recommend anything to investors or people watching this live stream right now, is to just avoid GameStop, avoid AMC and all these other ones that they plan on squeezing, because there's no real value in it. And at least on my YouTube channel and the way I teach people to invest is fundamentally driven on if the company is going to be profitable or not. Unfortunately, GameStop is on the verge of bankruptcy because they haven't been able to adapt well with the change of how people buy and play games. Pretty much everything is digitally downloaded to whatever system you're running, and people hardly buy disc games anymore. So just like what happened with Blockbuster and the movie industry, when Netflix came along, Blockbuster kind of went bankrupt and out of business. And GameStop isn't far behind unless they come up with some new way of doing business that, revolutionizes the industry. So make sure whenever you're researching any of these companies that you want to invest in, look at their fundamentals, look at their balance sheets, their financials, their tax forms, and really figure out if they're a profitable company, if they pay dividends, and if you think they'll stay profitable in the long term. Don't just jump in on this because Reddit told you to, or there's a hype or anything like that. Will the market crash and then no one can invest again is the next question. The market will crash eventually. You've heard it on the last live stream I did. The market will definitely crash because everything is overvalued. Bonds are overvalued, stocks are overvalued. Everything is just in a hyper bubble right now. So yes, the stock market will tank. And in my opinion, I think it'll make the Great Depression look like a shadow. That's how bad we're going to see a depression hit eventually. I think it'll be in the next 5 years, but I'm not a psychic. I can't predict the future. But as far as this is just one stock we're talking about, or at most like 5 or 6 that the Reddit feed keeps talking about. So I don't think this has the power to crash the market. However, if it gets bad enough to where these hedge funds pull completely out of the market to support the losses they take on their short positions, then it could cause the market as a whole to dip a little bit just because there's so much money moving out of the market. But the market is over like 20 some odd trillion dollars right now. And a couple billionaires moving money isn't going to cause a giant dip as we imagine. As far as no one being able to invest again, that it's not going to happen unless we lose a bunch of other freedoms as a country. But will the SEC create more rules and regulations on how to watch for this kind of market manipulation in the future, especially as the freedom of communication over the internet is immediate? Yes, they definitely need to. And I think, we're past the days of a bunch of people working in the stock exchanges, screaming and answering phones. We're past those days. Everything's immediate. Everything's at light speed. Everything's online. And there needs to be better rules and regulations, and there needs to be better eyes, in a sense, watching out for this kind of thing. But as far as you guys as the investors, really focus on the fundamentals that I teach you guys, really focus on if a company is profitable or not. And if they are, I teach people to buy and hold and get value over time for really good growth. I am not a day trader by any means. So if that's your style and you want to make a lot of money really quickly, then I'm not really the guy to watch. I teach people how to really get value in the long run and basically do what Warren Buffett has been famous for, and being fearful when others are greedy. And it is safe to say that everyone in GameStop right now and all the other ones that people are shorting, everyone's being extremely greedy right now. So you guys can count me out when it comes to that kind of stuff.
What do you recommend for anyone who already has bought GameStop stock and either can't sell or hasn't sold it yet?
If you already bought GameStop and you're having trouble selling it, then I would, on Robinhood and a bunch of other platforms, there's ways to adjust what your sell price is. Most of the time they put it automatic based on, the current price of the stock. Excuse me. But maybe put that price even lower. It'll be less profit for you, but it'll be more favorable for someone buying to buy, that much more cheap compared to what the current price is. So if you already are holding GameStop and you want to get out, try lowering your sell price or your asking price. That way it encourages more people and the orders to get filled more quickly. If you're just locked up completely and no one wants to buy your stuff and, because Robinhood and other places aren't letting you, then, I mean, I don't really know. If you're locked up, you're locked up. You could try and kind of like, if you can't beat them, join them, where you start shorting the stock as well, so that eventually when all this blows over and the stock price goes back down, you'll make the money back that you're going to lose when the stock price falls. If that makes sense, you're kind of switching sides. That's an option. Or you can keep buying calls like the Reddit people are doing. You can keep buying calls, forcing the price to go up even more, and hope to God you guys are on the winning side. It's, if you're already in, you're already in, and you got to ride the wave as best as you can. While there's hardly any value, I also want to give everyone out here that is investing in cryptocurrencies a warning on Dogecoin. If you research Dogecoin, in the bio, it literally says this coin was made as a joke and is meant to, in a sense, shadow something called Litecoin, which is another cryptocurrency. But unlike Litecoin, Dogecoin has no limit to how much Dogecoins can be produced. So when investing in cryptocurrencies, how I teach my viewers and how I teach my investors, if you're going to invest in cryptocurrencies, you're going to invest in cryptocurrencies that have inherent value, just like gold would. It is meant to be a hedge against inflation and fiat currency. Fiat currency isn't like, the car fiat. Fiat currency is the US dollar, any paper dollar that's not really backed by anything other than the government saying that's what it's worth. So as in 2020, when our government printed trillions and trillions of dollars and flooded them into the market, that created a lot of inflation that we're going to see come very soon. Well, if you were in gold, real estate, or crypto, which is kind of grows and is deflationary, if you're in the right cryptos, of course, that protects you and holds your value and holds the money you put in from inflation. So as the value of the dollar over time goes down, the value of Bitcoin, of gold, and everything else will go up, thus canceling out the inflation and giving you exactly how much money you have. So if the point of investing in crypto is to have a storehold of wealth and a storehold of value, just like gold would be, Dogecoin is nowhere near that, because it is a cryptocurrency that has no limit to how much coins can be produced. So by nature, it is inflationary, and anyone that wants to buy coins can buy a joke. But a lot of people, just like they're doing with GameStop, are flooding the market of cryptocurrencies with Dogecoin, throwing the price, the price through the roof, which right now I think Dogecoin is trading at about 6 cents a coin, which
wasn't it at 0.07?
Yeah, about a week or 2 weeks ago, it was at point like 0.007 or 0.002 or something like that. So 6 cents a coin really isn't a whole lot of money, but in reference to how much growth it's gone already because people have been flooding the market, like it is a giant thing of market manipulation. And unfortunately, there's going to be uneducated investors that are, ruled by FOMO and the fear of missing out, and they're going to jump in on GameStop. They're going to jump in on Dogecoin because they're going to try and ride the wave, thinking it might be the next Bitcoin, and inherently it's just not. We know how many coins there are in Bitcoin. There is a limited amount, and because we don't even know the creator of Bitcoin, like we know the name that he put on, but we don't know who that guy is. We can't even force him to create more coins in the event of like some mafia like inside job. So there will never be any more than I think like 26 million Bitcoins out in the market right now. And that's it. It is inherent deflationary because there's a limited supply, whereas doggy coin is not. So if you're going to invest in anything, whether it's crypto, stocks, bonds, mutual funds, doesn't matter what you're going to invest in, make sure you read the financials, make sure you follow the fundamentals of investing, and you hold for the long term. Don't be a day trader because statistically 84% of them lose a lot of money and go bankrupt. But in short, that's what's been happening with GameStop, Reddit, and all the drama going on with them. There's just having a huge pissing contest, and I see it ending very badly for pretty much everyone involved. So as of now, just avoid it like the plague. Bye.